Hello, my name is Vladimir Tikhomirov. I'm Chief Economist at BCS Global Markets, and I'll give you my view in the macro area for the coming week. Basically, the past week has been not much different from the previous week, and we have seen two quite clear-cut trends. On one hand, we see continued growth in global markets, and markets are posing themselves for post-pandemic situation. The hopes are that with vaccines coming, with the spring, with the change in the base factor in the second quarter next year, both the statistical data and the economies at large would start showing more and more of positive developments, and markets are preparing for this future. On the other hand, the current situation in the health area globally does not give a lot of reasons to be very optimistic. The pandemic is hitting new highs, and actually, World Health Organization is warning about the possibility of a third wave of pandemic. They already said that in few Asian countries they have seen the third wave evolving, which is not a base case scenario for the markets, and which could come as a negative surprise for many investors. So, looking into the immediate future, I should say that at least couple, perhaps 3-4 next months would hardly provide any soothing or any positive information because the pandemic is likely to stay with us, which would mean that the situation in economies, many economies and including developed economies, would remain under pressure, particularly if we take into account the base factor and traditional growth of activity in services, trade ahead of the holiday season, which was the case last year, but which is not likely to be the case this year. So the statistical data and the company reports would show more and more weakness in the coming weeks. But the markets continue to grow, and this is something that we need to take into account as well. Going forward, basically, the key driver for the markets would be the decisions by governments and regulators in December, whether there will be new packages of aid coming for global economy, particularly for the large developed nations, or not. If such aid is coming, and the speculations are that perhaps the central banks would have to increase their support for the economies, given no progress on the political side, then this could provide additional support for the markets, and we can see December rally, which would support the ruble, which would support the Russian market as well. However, if this aid is not coming or not coming in large volumes, then we could see some correction in the markets, because the markets have gone up quite significantly. Ruble has appreciated to the levels not seen in the last couple of months, and oil prices are hitting 3 months highs, with Brent at around $46 per barrel. So if that, if there is a correction, then we can see ruble actually coming down a bit, and this is our base case scenario. We expect ruble to continue trading in 76 to 78 ruble band up through the end of the year. On the Russia side, last week, the official statistical agency has published its monthly report for October, which has shown a mixed picture of the economy. On the positive side, we did not see a lot of additional contraction on the consumer side. Retail sales are running at minus 2.4% year on year. actually better than the data we have seen in September when it was -3. And the same refers to the consumer segment of industrial production. The production of consumer goods is also showing quite robust dynamic. This could be explained by the fact that Russian consumers are trying to fix or trying to make purchases ahead of expected increase in price tags. Given the ruble devaluation, we already have heard some big importers announcing coming changes in prices in early next year because of weaker ruble. So the consumers are rushing to buy particularly more expensive goods like new cars, and we have seen a significant increase in demand for new cars. And car production in Russia has reached many months a high of 5.4% year-on-year in October. On the negative side, we have seen quite an expected big drop in agricultural output. Agricultural output declined by more than 6% year-on-year in October, almost solely driven by the fresh food production, vegetables and fruit. This year harvest is much weaker than it was a year ago, which explains the data, but it also gives us a reason to believe that inflation, which started to pick up in mid-October, inflationary pressures are going to remain fairly high, particularly driven by the fresh food component, which means that in the coming two to 4 months, annualized inflation in Russia is going to increase. I actually expect it to hit about 4.5% year-on-year level sometime by February next year. However, after that, in second quarter next year, inflation pressures should significantly come down, particularly because of the reversal in the base factor. All that means that on the inflation side, basically, I expect the central bank to retain its policy to make no changes to the key rate because of rising inflation. And I basically reiterate my view that the key rate is likely to remain stable at 4.25% throughout the first half of next year, at least. As I mentioned, ruble, it could actually go a bit higher from the current levels, but on a 1 month horizon, basically, I expect the currency to come back to more or less levels around 77 or so rubles to the dollar. This is, I guess, all on my side. Thank you.